Second session of the second day here at conference. It's great to see that so many of you have joined us for what is going to be, I think, a very interesting session on under the radar risks. So I'm thrilled to be joined this morning by three industry specialists to talk a little bit about the things we don't think about every day but could have a material impact on our investments over the longer term or possibly sooner than we think. So before we start, just a little bit of housekeeping. So as normal, you can tweet your thoughts, you can submit questions through the app, and we will be having live polls through each of the presentations. So please do get ready to submit your views as we go. But firstly, let me introduce our panel this morning. So we have Maria Lettini, who is a director of the FAIRR initiative. We have Carlota Garcia-Manas, who's a senior analyst from and investment stewardship from Church Commissioners. And we have Carola, Lamoen, who's the head of active ownership at Robeco. And to just give you a flavour of some of the range of issues that they're going to be talking to us about this morning, we're going to hear from Maria first, who's going to talk about antibiotic resistance risks. We're going to hear from Carlota around human capital and corporate governance risks, including modern slavery, tax and diversity. And then finally, Carola will take us through single-use plastics and how all this fits into our investment process. So we've only got 45 minutes for this session, and as I say, there's a huge range of issues to cover. So without further ado, Maria, over to you. And just while Maria is setting up, if you're not aware of the FAIRR initiative, this is an initiative for global institutional investors, really about raising the awareness of some of the risks, but also opportunities from things like intensive animal production and also global food supply. So, over to you.
Thanks. Thank you very much for the introduction. I'm delighted to be here. Again, apologies on behalf of Jeremy Collar. He was unable to make it. I'm clearly not Jeremy, but I'm here to speak about FAIRR and antibiotic resistance on his behalf. So I'm just going to kick off just to ask one question. How many of you or your family members have taken antibiotics in the past 6 months? Yeah, so quite a few. And I would say, at least from my experience, I don't know how you feel, in the last 10 to 15 years, I find that when I go to a doctor, there's a lot of prudence about giving out antibiotics. It's changed quite a bit in the past 20 years. In fact, where I used to bring my kids to the doctor, if I begged hard enough, I'd get antibiotics. And that's just simply not the case anymore. So why are we still talking about antibiotic resistance if we're seeing stewardship practices really increase from the medical community? Are the risks around AMR really financially significant? And that will prompt my polling question to all of you. So if you guys can get out your phones and log into the app. So what do you think, given what we already know about antibiotic use and stewardship, at least in your own everyday lives, is the estimated loss in global output from AMR projected to be between now and 2050? Is it $100 million? That seems like a lot. $100 billion or $100 trillion? Everybody's polling. Interesting that no one said zero, but somebody did. Someone did say 100 million. Okay, great. I think the consensus really is at about 100 billion. Should we move on to see the results? So strikingly, if we do not act now on the issue of antibiotic resistance, we're talking about upwards of $100 trillion of lost global output. That's 3.6% by recent estimates of global GDP. We see this as a significant financial risk to global financial markets and to investor portfolios. We're talking about billions of dollars of cost to insurance systems around the world. We're talking about hundreds of thousands of lives lost globally, and seriously affecting how we see developing markets progress over the next couple of decades. So this has real significant impact on potential growth for portfolios. And why is this even happening? I mean, we were talking about how we think our medical doctors are doing what they should in terms of preserving efficacy of our antibiotics. Well, the fact of the matter is that really when we think about use of antibiotics, most of us think about the medical industry, when really the majority of the use of antibiotics, as you can see from the first box here, is used in the food system. So over 70% of global antibiotics go into propping up a system to produce meat, fish, and dairy through an intensive animal production system. So why is that? So as the world needed more protein, we needed to produce animals quicker, and we intensified those systems to a system which meant that you have hundreds of thousands, in many cases, of birds, of cattle, in very closed, confined systems, which require antibiotics to be given to them on a daily basis in order to maintain a healthy flock or herd. So these antibiotics are off the shelf in the feed. Farmer can just take a sack of feed their animals to ensure that their health is maintained. Without these antibiotics, quite possibly, given the systems that are in place right now to produce the meat that comes to your table, we would not have healthy animals or healthy assets by the time they got to the supermarket. And this, frankly, is affecting not only developed markets, but developing markets. And what do we do to curb this resistance that's propagating? So you might think, okay, well, I'm a vegetarian, I'm a vegan, I can avoid being exposed to antibiotics if I'm just not eating meat. Or maybe I'd go and I'm able to buy from Waitrose or my other supermarkets meat that hasn't been treated with antibiotics. Doesn't that solve the problem? Well, unfortunately, that's not how antibiotic resistance is transmitted in the majority of the cases. So antibiotic resistance, or bacteria which is resistant to antibiotics, propagates in these farming systems. And these are common bacteria that you hear all the time: Salmonella, E. coli, MRSA. And those bacteria will be in the farming systems. Without constant daily exposure to these antibiotics routinely, there would not be resistance that would be building up within these bacteria. And so these bacteria are resistant. We hold bacteria in our gut, as we all do, and we're transferring this resistance amongst each other, irrespective if we're eating the meat that, from the animals that were grown in these systems. So this risk can be catastrophic. The spread of antibiotic resistance could actually decimate entire cities, entire populations, and can spread very rapidly. This means that we're going to be able to not treat very common infections, to be able to be treated for very common surgeries, and quite frankly, could cause 100 trillion of lost global output. So what are we doing about it? I mean, many of you might have heard that there's new EU regulation that's been rolled out. That's fantastic. Jeremy, through his foundation, was instrumental in pushing forward new EU regulation that limits the use of antibiotics in livestock. The EU is just one region in the world. Obviously, other countries have adopted national action plans, and again, this has been pushed forward from UN agencies. All of that's fantastic, and again, the EU is in the forefront of this stewardship. However, again, the way the world is today means that people are traveling from country to country, and irrespective if we're using antibiotics in our own country prophylactically or routinely, and even if we are using them with a veterinary prescription, we're still exposed to AMR as we travel across the world and as people come to our region from other areas. And antibiotic use is rampant in the developing countries. As you know, as you may or may not know, in India, you can buy antibiotics on the street. They've done analysis of antibiotic resistance in far-reaching little towns in the middle of nowhere in some of these areas, and they found antibiotic resistance within family farms where they're breeding chickens just for their own use. So this is really a catastrophe waiting to happen. And while we're seeing national action plans slowly rolling into some kind of regulation and legislation, which is fantastic, one of the things that we can do as investors is to begin to ask the companies in our portfolio what they're doing to reduce antibiotic use in their supply chains. So FAIRR is an institutional investor network, as Rachel mentioned. We have over 280 members with support of over 12 trillion of AUM. And one of the things we do is, besides produce expert research, is also facilitate collaborative engagements. We facilitated a collaborative engagement on AMR for the past 3 years. And one of the things I'd like to call attention to is the real success we've seen when investors engage on this issue. So in the first year we ran the engagement, we engaged with 10 fast food companies, McDonald's, Yum Brands. One of those companies in the beginning of the engagement had a reference to antibiotic use in their supply chains. By the end of the first year, 8 out of 10 companies had a policy explicitly stating that they were going to be reducing antibiotic use in their meat supply chains by a time-bound target. We're now in year 3 of that engagement. We now are engaging with 20 companies. 18 out of the 20 companies have some kind of antibiotic policy saying that they're going to reduce the use of medically important antibiotics in their supply chains by a time-bound target. And again, this is hugely powerful. When you think about a McDonald's saying that they're no longer going to be sourcing chicken, which has been treated with antibiotics, in their full-service restaurants, you're actually instigating a change across the entire global supply chain. McDonald's sources chicken from every single meat supplier in the world. So this is hugely powerful. And it's something that we, again, call for investors to really act on, to not only preserve the efficacy of our antibiotics, but also to make sure that the risks to our portfolio are mitigated. As you saw from the first slide, I mean, these aren't small numbers. The risks to supply chains are huge. And when we think about the knock-on effects of potential spikes to meat prices, to healthcare systems, this will actually have a significant impact on future profits of companies and future value of portfolio. So I'll leave it there. Obviously open to questions going forward, and do want to please catch up with me later. There are specific questions you can be asking of your portfolio companies. You can be having your consultants ask of your managers to make sure that you're managing these risks effectively to safeguard value. Thank you.
Thank you. Thank you, Maria. So as you can see, an absolutely fantastic research database is being built to help us analyse and engage productively with some of our investee companies. And this is what Carlota is now going to come and talk to us in her day job.
Good morning, everybody. I work in the responsible investment team of the Church Commissioners. I would like to introduce the Church Commissioners to those of you that don't know us, but also provide some insights in terms of emerging issues that we have found and the way that we are addressing it through our stewardship function. The Church Commissioners is the 3rd largest charitable endowment fund in the UK, and currently have around 8.3 billion pounds in assets under management. We are a disciplined investor with long-term return targets of RPI plus 5%. And we hold a diversified portfolio of assets. And the objective of our investments are to distribute the proceeds to the clergy, churches, missions, and bishops and cathedrals. The responsible investment team is very focused on inclusion of responsible investment principles into management selection and designing of mandates, but also focus on impact investment, responsible investment, and stewardship. In the next slides, I will go pretty quickly because I realize that I have quite a lot of material to cover, focusing pretty much on human capital and corporate governance and how we approach those from a voting and engagement point of view. Before that, I would like to get a question to you and see how you feel about one of the particular topics I will be covering. This is a tax. So how does aggressive tax planning by investee companies actually harm the asset owners? Is it is it A? No, nothing. Addressing the eventual regulatory risk could be expensive. It could eventually damage the company's reputation. It doesn't. Investors win when their investee companies legally beat their taxman. Please vote. Sorry, the first answer was by starving the company's own local infrastructure of capital. And now that is clarified. So this one, unless the previous one is a little bit more mixed, although it would appear that reputation is kind of winning. So that is interesting. I will speak a little bit more about the different elements that we see, but that will be on slide number 3. On slide number 1, I want to look at human capital and how we're looking at it from the perspective of labor changes and societal changes. So we are observing a lot of changes, technology, economic, environmental transitions that could potentially have an impact and are having an impact both on individuals and communities. Historical, we also have seen benefits from changes in, say, medical, transportation, etc. However, these changes can be so rapid that we as faith investors are asking questions about the potential problems and unforeseen impacts that those changes may take, particularly on the dignity of work and in flourishing communities. Issues associated with the impact of those changes can be measured in terms of inequality. The OECD published a report explaining that 3 Gini points changes, which is a measure of inequality, could have an impact of 0.35% on reduction on economic growth. The impacts of the gig economy, the University of Oxford published a report that while showing that the gig economy has some potential benefits in terms of autonomy, it also has implications, negative implications on antisocial hours and impact on workers' well-being. Artificial intelligence also had a potential impact in robotics on job losses. PwC published a report that showed a potential 30% reduction on jobs by mid-2030 and an impact of 44% on low-skilled jobs. And then the prevalence of modern slavery. A survey by the Ethical Trading Initiative showed that 77% of companies surveyed found that there would be forced labor in the supply chains. So how are we addressing these different issues? With regard to modern slavery, we are approaching it on a 3-pronged way, looking at laggards in terms of disclosure through the Slavery and Human Trafficking Statement as required by the Modern Slavery Act 2015. We're also looking at employers' pays principle, in focusing in particular in the hospitality industry, as many migrants are sometimes required to pay exorbitant fees, recruitment fees. And finally, the Clever Initiative for Modern Slavery, which is a Church of England project. We as investors are supporting that initiative by engaging with the supermarkets as one of the elements of society where modern slavery has been identified, has been in the hand car wash industry. So our engagement with supermarkets in particular has been with those that have hand car wash facilities in their sites. With regard to the living wage, our approach has been to take the input from the Living Wage Foundation that finds 3 positive impacts of applying living wage to the workers: impacts on reputation, motivation and relationships, and business differentiation. We have incorporated living wage into our voting policy, and we'll use our voting rights against those companies in the FTSE 100, in the communications, financials, or pharma that are not UK living wage accredited. And also we continue our engagement with those companies. With regard to the AI, which is really the most emerging of these issues, is still work in progress. We take input from the World Economic Forum that has identified 9 ethical issues associated with artificial intelligence, including unemployment, inequality, bias, and security, and are at the moment getting more research done and will engage with companies, in particular associated with code of conducts and how they integrate consideration both of the opportunities but also predicting and mitigating potential risks. And with regard to corporate governance, issues that are of particular interest to us as we were seeing in the policy tax transparency. So it's interesting that reputation has come as the top answer in the poll. We also take into consideration, so that is indeed an important issue for investors, but we also take a profitability assessment in terms of whether future cash flows represent real performance or access to subsidies and artificial tax structures. We also take tax disclosure as a measure of risk appetite and risk tolerance by board members and management. And we want to make sure that genuine economic activity is taken into consideration. Associated with reputation, we also see that companies that have transparent and balanced tax structures are more likely to resist better scrutiny and potential regulatory changes. And finally, and especially as an ethical investor, we take into consideration how taxes support intangible and tangible societal needs. With regard to bribery and corruption, we focus very much on practices around the extractive industries. We published our extractive industries policy in 2017, and following the work that we have been done with other investors on tailing dams, which we launched an initiative on Monday, we are also focusing on corruption and bribery in the extractive industries. OECD report in August 2016 showed that 1 in 5 instances of transnational bribery occurs in the extractive sector. So a way for us to address the potential lack of transparency or encouraging further transparency is to support the extractive industry transparency initiative. And finally, with regard to gender diversity, we're part of the 30% investor club, 30% club investor group. We do very active engagement with companies focusing on board diversity. Our hypothesis or the rationale for our engagement on gender diversity is linked to the consideration that cognitive diversity at board, especially represented by proper gender diversification and also a broad spectrum of skill and experience, tends to provide or seems to show companies that will have better outcomes for investors. We have integrated not only engagement through the 30% club, but also include considerations of gender diversity in our voting policy. And in particular, we'll be voting against the chair of the nomination committee in FTSE 350 companies when the female representation at board level is lower than 33%. We will vote against all of the members of the nomination committee in FTSE 100 companies when the female representation is less than 25%. And newly from this year, we will be looking at also gender diversity outside of these 2 indices and looking at performance in the US, Europe, Australia, and New Zealand. And we will be voting against the chair of the nomination committee when the board does not have at least 1 female representative. And that's it. I'd be happy to take questions later. Thank you.
Thank you, Carlota. Some great examples there of how, through engagement and collaboration, some real progress can be made. I'm now going to hand over to our final speaker, Carola, who's going to talk about active engagement a little bit more.
Thank you. It's a great pleasure to be here. I'm head of the active ownership team of Robeco, and in this capacity we engage with hundreds of companies on a lot of environmentally, socially and governance related issues. This includes, for example, the meat supply chain in close collaboration with FAIRR. We also focus on tax, similar to what Carlota already mentioned. Living wage, everything is on the radar, but today, in the next couple of minutes, I would like to focus on our work on plastic, because yes, that is also a relevant topic for investors. But first, I would like to test your knowledge, also with a polling question, so please grab your phones and look into this question. The global production and consumption of plastic has increased significantly since the 1960s. How much was this increase? Was it a factor 10, up to 152 million tons? Was it a factor 15, up to 235 million tons? Or C, was it a factor 20? And please give me your votes. Well, I think it's very promising to see that we have a lot of plastic experts here, because indeed, the answer to this question is C. The factor was, it is a 20 times an increase. And as you know, that plastic was only invented in the 50s. It is amazing to see what a dramatic increase the plastic production has gone through. And also it is interesting to realize that it is expected to double again in the next 20 years. Well, enough about that. Why is this relevant for investors? Why would you look into this? There are many different angles to look into this. First of all, you see an increasing focus on the environmental pollution, plastic soup, but also growing consumer awareness, upcoming regulation, ban of plastic bags, ban of single-use plastic products is coming up in Europe, in Australia, but also in India and in the United States. So many aspects which directly link to investor relevance. How are we looking into that? And to do that, I would like to take a step back, because why would you engage on the topic of plastic? For us, it is important, the active ownership team, where we focus on that we don't act in isolation, but that what we do when we reach out to companies is that is an integral part of our investment process. So we don't act in isolation. We collaborate closely with our portfolio managers and also with our research department, which basically join forces and look into all those companies where we invest in, and we define what are financially material topics. And if we focus on, engagement, if we want to get into an active dialogue, basically we look into three different aspects. First of all, we are going to consider, does it make sense to engage? Is it engageable, the topic? Second, very important, is the topic financially material? And the third area of focus, can we really make an ESG impact? And if the answer to all those three questions is a yes, then we can consider to engage. And we do this in a very structured process. So my team, we're reaching out to our portfolio management teams, to our research team, and also to our clients to ask, what do you consider financially material, and where should we focus on in our engagement practices? Well, every year, in a very structured approach, we choose a couple of topics where we focus on. And for this year, we've identified basically 4 themes where we focus on. Well, I could spend already an hour talking about all 4. I will highlight them shortly. Palm oil, single-use plastic, the social impact of artificial intelligence, nice that also Carlota mentioned that, and digital innovations in the healthcare sector related to drug pricing. All those topics are very financially material, but then diving into single-use plastic. What are we going to do there? What is our work? So basically, our focus in this engagement is on, first of all, companies that use plastic, and second, companies that produce plastic. So we focus on the food and beverage sector and on plastic packaging companies. And in the conversations that we have, of course, we want to make sure we are extremely well prepared. So we do our research well. We do that in an intense process internally, but also we use the knowledge that is out there in external collaborations. So, for example, I would like to highlight the Plastic Solutions Investor Alliance, which is a group of investors that have joined forces to engage on plastic. And if you are reaching out to companies and do that jointly, it can also create a very strong signal that this is not a single investor considering this important, but that this really is a crowd, a massive crowd that is looking into that. So we're aiming to have to build this knowledge, having this research, and then we get into dialogue with companies, food and beverage and plastic packaging companies. And what I also would like to highlight, if we have those dialogues, if we have those conversations, we also consider it very important to link them to the Sustainable Development Goals. And who has heard about the Sustainable Development Goals? I think, well, quite a substantial amount of people. Basically, there are a set of 17 goals identified by the United Nations, which are basically a blueprint for a better world. And if we look into those goals, specifically 2 of those goals directly relate to the topic of plastic, responsible consumption and production, SDG number 12, and the Sustainable Development Goal related to life below water. And of course, you're probably aware of the plastic soup. Those SDGs are also connected to that. And we also use that in our conversations with companies to discuss that. Well, what do we focus on? Basically 3 things. What are you doing for recycling, for reusing, and compostable packaging? And what is your plan? And we approach that both from a risk perspective, but also from an opportunity perspective, because this is not only about risks, but also about opportunities. Well, so far we see that companies are very open to this, to get into a dialogue with this, and they are open because they also see there is a long-term interest for them to look into this. They're also looking for solutions, and they're happy to engage on this topic with long-term investors that are like Robeco and others that are basically aiming for long-term change. And this was my introduction, and I look forward to any questions.
Thank you, Carola. So we have about 10 minutes now for questions, and thank you to those of you who have been submitting your questions through the app. I'm going to first of all just make a start on some of the ones that have coming in. And firstly, Maria, a question about antibiotics. If 2/3 of antibiotics are given to farm animals, are they developing a resistance like humans, or are they being given more antibiotics to maintain effectiveness?
Animals are developing resistance, as are humans. What they do, as we do in the human health industry, is you can switch up your antibiotics, and so when one antibiotic isn't effective, we move on to the next one. The problem is, and I think this is crucial, the pharma industry isn't incentivized to produce new antibiotics, right? It's very much a volume business. So that's another huge risk we need to consider. At some point, we run out of antibiotics, and there are no new ones being developed.
Thank you. And as I said at the start, we've got a huge range of topics. So to make sure I try and give fair time to each of the speakers, we're going to now switch to diversity. And Carlota, questions come in really about the evidence that gender diversity is a good proxy for cognitive diversity. Is there an emerging bank of evidence to support that thesis?
I think there is definitely evidence of the status quo not working and group thinking being linked to structures of board with not diverse board. That doesn't mean that diversity is only about gender. We definitely are seeing positive benefits from different market capitalization, cross-pollination of kind of skill sets. there is definitely a body of evidence that gender diversity impacts performance. And therefore it impacts as well the diversity of cognitive kind of resonance of the boards.
Thank you. And just moving on to the plastics issue, which has had a huge amount of press and media attention. In terms of how many millions of tonnes of extra food waste, is there a number that's acceptable in terms of reducing the use of single-use plastic? What should we be aiming for?
Well, I think we shouldn't approach this from a quantitative perspective. I think it is more important to look at this from a qualitative perspective. If you look at the numbers now, currently of all the plastic being produced, only 20% is recycled and the rest is basically single-use only. Given this massive increase, we should move towards some kind of a transition, facing also all these growing concerns related to plastic soup and basically also human impact. So I cannot give you a hard number, but if we look at what is currently going on, there is need to move to reusing, recycling and composting, and also become innovative and thinking about other solutions for packaging. And there is a lot out there. We should only make that move to the next level.
And may I add as well, in terms of sectorial impact, it's very large. I mean, the last BP economic outlook actually had a potential ban on single-use plastics as part of their modeling. So it's not immaterial. It's not just for maybe the supermarkets or the producers, but even for the petrochemical and petroleum industry. So it's a very material issue.
Yeah, oil is a very important component of plastic. Yeah. So indeed, it's not only the plastic packaging company that is affected. No, this is going in many sectors. Yeah, agree.
And I guess one of the things that, as an industry, we're quite obsessed with is measuring things. And you mentioned the Sustainable Development Goals. So how can we measure success relative to those goals, particularly in things like private markets as well?
Yeah, so basically how we currently approach companies is that we ask them, what are your plans? Do you have any targets? Do you have ambitions about your plastic use? Are you aiming to reduce the amount of plastic? Are you having any targets to change to more recycling? And we ask companies to set those ambitions, to report on that, and also to live after that. So once for those companies where we are in dialogue, the trend is going into the right direction, then the engagement is a success.
And I guess moving on to the broader topic of engagement, how do you make sure that, and this is probably for each of the panelists, how do you make sure the companies you're engaging with are not just paying lip service? That's one of the challenges. And in doing so, engage the industry on doing more in this space?
I think the asks are crucially important, and everyone's on the same page. And in many cases, I mean, with our issues, which are quite novel, and maybe even in the case of plastic and gender, it's in some ways you're educating the companies as well of the issues that are important to investors. So it's a bit of partnership. Time-bound targets are crucial, and understanding the time frame by which you're expecting them to move, and the scope of your asks as well, I think is crucially important.
Mm-hmm. I think as well, I think the active investor community are now coming to the next generation of engagement and moving from disclosure, which is a first good step to engage companies, to performance. So in the gender diversity case, we have been very focused on companies that did not have any female board representation, and we are, the proof is in the pudding. We are seeing more women coming on board. And then, the ultimate goal is to have really strong boards, but definitely the proof is in actually the change in behavior or the change in structures.
Yeah, some last additions from my side. I earlier already mentioned if we engage on topics that are financially material. So this should also be in the long-term interest of the company. And I'm happy to see that you also see a growing awareness of companies, for example, on the topic of plastic and on the fact that this is financially material. It doesn't mean that they change overnight. Change takes time. We closely follow those developments, asking for transparent commitments and report on progress being made. And that's how we try to keep track of improvements.
Yeah. Mm-hmm. Great, thank you. And on a lot of pension funds, and I'd point certainly to those in the local government sector, do get a lot of pressure to divest, and it is difficult when you've got outcomes that do take a period of time. Are there any sort of tangible successes you can point to? I mean, we heard a couple of examples, for example, with McDonald's, but particularly in the plastic space. Can you point to examples of tangible outcomes that can really demonstrate the value of engagement?
Well, I think the topic of plastic is not already for many years on the agenda. So these dialogues are now 1 year, 2 years starting. We see that several companies have committed to ambitions, and so certainly there are some good hopes. But our engagement is not finished yet. So we are working on further improvements. Talking about this topic of divesting or not, I think it's always very important to make a distinction between the product and the behavior. And if you are looking towards companies with products where you cannot relate to, for example, controversial weapons or tobacco, on those topics you cannot have a useful conversation. So in that case, divestment might make sense. But if you're talking about behavior, where you see that improvement is needed, ESG behavior, then it makes sense to engage and to have a discussion to actually improve the company's behavior. So that's a very important difference. Divestment related to products, and of course having this dialogue related to behavior. And of course, if in the long term this does not work, then you should count what to do next. But first and foremost, we aim for engagement.
I mean, a number of these sectors have, been operating in the same way. I mean, since the 50s, even, how we produce food, it's intensified in the 50s as well. So, I mean, we have to recognize that often operating systems or strategies take some time to change and be able to work with the companies together, I think.
And what always hits me is we thinking about some of the risks we've talked about. They're so wide-ranging that there'd be nothing left to invest in. You can't avoid them, unfortunately, I think, in a lot of cases. So thank you. We are out of time, so thank you very much for your questions. Just before we move to thanking our speakers, looking ahead for the rest of your morning, we're about to go into a refreshment break, and there will be a session in the Learning Hub on cash flow driven investment, and then we'll be back in here at 11:45 to talk a little bit more about the impact of global warming on pension fund investments. But thank you ever so much for my panel, and thank you for your questions. Please join me in thanking them.